Hey everyone, this is going to be the daily review for the 6th of September 2024. Now, if you go on my channel, you'll notice I didn't do a daily review yesterday. Now, that was just a completely no trade day for me, so I don't want to give a daily review if I don't actually know what happened in the markets, because I just didn't even look at the markets yesterday. So, it was a no trade day because today we had NFP news. I don't trade the day before NFP news because it's low probability, but today was a very high probability day. Unfortunately, I was break even. I did take a trade, so it was my first trade of the week, and I had the direction right and everything was good, but it's a break even trade, unfortunately. So, and I'll kind of go into the trade it took. So yeah, so coming in the day, I was actually bullish. Now I did take a short, but I was bullish coming in the day. Clearly be dumped, but I was bullish because we tapped into this daily fair value gap here, or we were in this. So we were in this daily. On the daily, we tapped equilibrium. What else? Kind of same on the 4 hour here. 4 hour fair value gaps here. Tapped into this one. We've been holding it. So coming into the day, I was bullish, but also we had created this daily fair value gap, and we tapped into it and rejected it. So I was bullish, but I did consider this, and I'm like, okay, like I'll be very, very bullish if we end up inversing this daily to the upside. Since we tapped and rejected, we're kind of playing between these two gaps. So a little, not the best probability conditions there. But anyway, I was mostly bullish going into the day. Just because of the fact that we tapped equilibrium, really, and that we're in these 4 hours. So I'd rather take longs and shorts, right? Um, yeah. So coming into the day, yeah, yesterday we had this. So here's the daily fair value gap wick here. We ended up sweeping the daily fair value gap and inversing these gaps to the downside, holding this. So yeah. And so coming into the day, I was, like I said, mostly bullish, but bullish and bearish. My condition for the day was kind of going to be this 15-minute, because it's a very obvious bearish gap here, and we came into it, and I wanted to see how we would react to it. So we ended up reacting very bearish. So since we reacted, um, you know, since we reacted to this kind of to the downside, I did flip. Well, my trade actually took place here, but I'll kind of explain what happened. So anyway, kind of in between these two gaps here, when I saw, I came on the charts and saw we inverse this 15 minute, so I was 100% bullish up to here, but I did not find a setup. So at 5:45, this would have inversed. Yeah, so I didn't get a setup based off because I saw that this I came onto the charts and I saw this 15-minute inversed, and we had news at 5:30, so I was kind of, yeah, I honestly thought I was gonna take a trade today because I'm just going to delete these gaps here because you guys know what we're talking about, and then we can talk about the important ones. So we had this 15-minute here. So we inversed this at 5:45, it seems. Yeah. So then I was looking for a long up to these highs, and we did actually get a long, and I was going to take this long, but it was invalid because my stop to break even would be right here, and this candle closed above this fair value gap, and we swept the high at the same time. So really unlucky there, because at that point, once this hits, then I don't have a spot to go break even. I would go break even here, but for me, that's not my model. It's not mechanical, so I didn't take it. The reason that the setup was good, though, is because we have a clear inversion here. This over here is a 5-minute. So right here, we tapped into, there's a 5-minute right here that the news made. And so coming down in the 30-second here, we had a singular for value gap. We tapped into the 5-minute. We, swept this liquidity here and got a nice bullish candle up, forming this order block. So very, very good. Honestly, could have taken this anyway, but it is not my model. Also, another thing is we have the data high here. This is such a good liquidity pool, and we came up to here so close to it, like 2 ticks below, and just didn't sweep it. It's even higher probability that we hit it now. We're just like generating liquidity up here. So anyway, we come up now to after this. So didn't take that setup because it was invalid by my rules. So when we came up into this 15-minute here, and like I said, this is my condition. I wanted to see how we reacted to it. So at this point, I'm kind of open to taking longs if we inverse it, or if we reject, then I'll take, and then I'm willing to take shorts. I'm just willing to take shorts in this 15-minute. And so in this 15-minute, we consolidate. We completely consolidate. So what I was looking for is what I want to see if we're consolidating at a point of interest. And by the way, we also have this abnormal wick here. We have this data wick, which is a really, really high quality liquidity pool, just like the data high here. I call it data wick, data high, data low. It's just the higher low of a news candle. These are very high quality liquidity pools because there's unfilled orders at these levels. And these orders wants to get filled to rebalance the market, just like that, right? So anyway, when we consolidate at a point of interest, like this, what you want to look for is displacement or a sweep to one side, and then get and then get the original move. So essentially, we're just accumulating, right? Then we manipulate to the upside, and then we distribute to the downside. Or for example, accumulate here, downside, and then you get the up move. So that's what you want to see. This is ICT concepts. We grab the liquidity of one side, and then we seek the liquidity of the other side. Also stopping out everyone. Once you go up here, the breakout traders are thinking, like when we displace up here, the breakout traders are thinking, oh, we're breaking out of this range, so go long. No, then we grab their liquidity and then we go down. That's how the market works. So what I wanted to see was AMD. Accumulation, manipulation, distribution, AMD, if you guys don't know that. So as soon as I saw displacement out of the range, I'm like, okay, we're going to stop out all these breakout traders because we are holding this 15-minute, so I'm still, bearish here. And then we get, as soon as we break out of this range, we instantly inverse this for value gap. This is perfect. A+. I took this, and then honestly, my target was here, and I wasn't going to hold everything to there. I mean, it's an 8, risk to reward. But yeah, I mean, so my stop to break even was this low. I could have it was debatable. My stop to break even could be these equal lows or here, and I decided to go here just because of the fact that at 8 a.m. my time or 11 a.m. EST, a speaker, a Fed speaker, Waller, I'm not really sure anything about him. I don't really know what he talked about, but he was going to speak at 8 a.m. So I was cautious. I was cautious about not going to break even quickly, just because I haven't taken a trade this week. It's Friday. I don't want to end the week red. Obviously, I'm prepared to do so, but I didn't want to end the week red here. And yeah, so I went to break even pretty quick here. I mean, not too quick. This is mechanically where I should go break even. Anyway, so we get that, and then at this point, I'm at break even, right? And also, I'll explain another reason I won't break even. Because I was in this trade at 6:29. I got in at like 6:24, right? Before market open. So at this point, I was like, okay, if I get to this low before market open, I'll go break even. Right? So essentially, I'm in this trade before market open actually happens. So what does that mean? Well, pretty much like at this point in time, I'm at break even. My stop loss is here. So I'm risk-free on this trade now, and market's about to open. So really, you could call it a gamble, but market open's going to either pump this or dump this. I don't know which one, but I'm break even, so I can either make money or just go break even. So at that point, I'm like, okay, I'm just going to hold the rest here. Got stopped out break even there. And then we got, yeah, and then look what happens here. So we just stopped me out break even, tapped into this BPR again, and then yeah, all targets smashed. So this was really unfortunate. I am thinking about this trade, and I do trust myself. I am a profitable trader, and I am pretty strict about my trades, but on this one, I could have waited, but the problem with waiting on this trade, like going break even here at these equal lows, is because of the market open. Because the market open can just pump and stop me out, and at that point, it's like, if I'm in this trade at market open, I want to be at break even, because it can just pump up like it did, and it can just keep pumping up, and, you know, I'll lose money. So that's kind of why I went break even. But yeah, so I mean, like, great read of the market. We got the top. There was another setup in here, so we hadn't reached the data lows yet. These would have been here. So we kind of we had this impulse down, right? And of this impulse down, we had a retracement to the 50% at this red line. We tapped into, we held this fair value gap, right? And then we inversed these two gaps to the downside. Pretty A+. But the problem with this one is one of the entire, of the entire range, we are pretty low. Oh, actually, well, the entry's low, but the delivery is not low. The problem with this one is we kind of just, you know, one candle, two candles, and then the candle that inversed this was just really weak. And what I want to see is momentum. Like this is momentum, just instant inverse. That's what I like to see. And also, you know, another reason, the guy was speaking at 8 o'clock. I need to be careful the entries I take. Yeah, and another reason I didn't take this was because, one, I already took the better setup up here. Like, this setup is objectively twice as good as this one. They're both good. They're both worth taking. This one's, like, debatable, but this one's really worth taking. And I took this, and it was break even. Do I really want to test my luck with a worse setup with the same objective? Not really. Then, what I was waiting for, okay, after that, as soon as we, you know, come back to this data low, I'm bullish again. Because, you know, remember, to the left, we have this daily fair value gap that we're in, and we've delivered from this 15-minute. We've already swept liquidity to the downside. I want to look for longs now. So we did have these 1-minute gaps here, which we, you know, held here with this wick, and we swept this liquidity here, this data low, and held this fair value gap at these fair value gaps at the same time. So the bodies held this fair value gap while sweeping this liquidity. It was very, very bullish signature. And we had this extremely clean 1 minute, nice big bearish gap, only one in its leg, perfect setup. And then I was like, and I was really expecting this to inverse. So this would have been this would have been the trade. But it just didn't happen, unfortunately. We just, yeah. And then we also had this one, this 30-second here. Actually, it was a 2-minute. So we had another A+ 2-minute because we, you know, swept this liquidity again. It didn't displace below it. We never got the 2-minute. Boom, didn't inverse. And then we just dumped the entire day. So, yeah, we just dumped the whole day. And then I ended trading at 8:10. So nothing happened after that. So unfortunately, I mean, today was kind of unfortunate. This whole week's been like, this is the only trade I've taken this week, and it was a break even. So I guess I'm good. But yeah, this was it. I mean, read the market very, very well, and that's what we like to see. A little, I mean, honestly, like, you know, I'm used to break even weeks and losing weeks, but this kind of sucks more than a losing week, just because, you know, this is a good setup here. It's just, I read the market perfectly today, but just nothing worked. I mean, I mean, I took this one trade, which was the break even. This long was fantastic as well, but it was invalid. Yeah, it's kind of a tough day, honestly, but it is what it is. Obviously, you know, like, the best advice I have for anyone is, like, don't let your emotions affect your trading. I'm going to be completely straight with you. I do feel emotions. I feel kind of I'm annoyed with the market right now, if that makes any sense, just because I'm reading the market really well, but just not making money from it. And that's going to happen sometimes, and I understand. I understand that that's going to happen. It's a little annoying, but next week we'll come in fresh. Um, and yeah, that's the only thing we can do. So I hope you guys enjoyed this. I hope, you know, if you're listening to this and you're struggling with something in trading, I'm just gonna tell you right now, I'm struggling with something too. Okay, like this week sucks. I'm not even red. It's just I wanna make everyone wants to make profits, right? But we just have to understand that we gotta be looking to be profitable traders, not making money. If that makes sense. We gotta be seeking to be profitable traders, not money. If that makes any sense. So, because if we think about the money, then we're gonna get lost, and we're trying to, you know, like, I took this A plus setup here, and then let's say I took this one lower and it failed. It's like, well, I already took the A plus one here, and I'm just chasing at this point. I don't want to chase. I want to take the good setups, get my money, and leave. Now, did I do that today? Unfortunately not. Will I do it next week? Yeah. I mean, you know, it's likely I do. Obviously, there's losing days. But anyway, I'll catch you guys next week. Just want to let you know, that trading's hard. And it will always be hard, but it's the greatest thing in the world. So, that's it. See you, boys.